Hey, everybody, come on in, get yourself a pour coffee, grab a Coke. I've got mine. And by the way, the still unadulterated, unmessed up Coca-Cola because RFK Jr. has not been allowed to remove the corn syrup from it. So, anyway, grab yourself a drink. And we got a big one for you today. We got Ted McKinney, CEO of the National Association of State Departments of Ag. And before that, we're going to hear from Howard Halderman talking about market activity. It's been pretty active here of late. By the way, Nolan, I don't know if we want to make sure that we allow Elizabeth on here. So we want her on, but I don't know if we need her on camera. So can you doctor that up? There we go. All right, we'll get started here in about 15 seconds. I kind of want to tell the guy, did you not see what happened to Coke 40 years ago when they messed with the formula? And now you're running around saying that high fructose corn syrup is bad and we're going to change Coke. It's the one, it's like one of the things I love. Nestle Quick, Coca-Cola, Coors, like three of my all no, you know, that Nolan, all k noises. I don't know. Anyway, all right, let's get started. Here we are. It's the April 3rd webinar for the Halderman Real Estate and Farm Management Company in Maximize Your Farmland Investment Series. We want this to be educational. We also want it to be interactive. At any time, you can go on and hit in the chat feature and ask a question because we absolutely want this to be interactive and informative, and it's all about you. Also, if you're watching a recording, remember you can catch these live. We do this every quarter, and we have great information that is applicable and immediately usable on your farm if you are a farmer or a farmland investor. So here we go. We're going to start things off. How we do this is we hear about the markets. We hear about what's going on with cash rents, land sales, activity in the marketplace across all of Halderman's footprint, as well as what the experts at Halderman are hearing about. And then we will go to our guest expert to talk about Washington, D.C. happenings, what's going on with agriculture. Obviously, this is very timely because yesterday was Liberation Day with Donald Trump announcing tariffs across 180 plus nations. All right, Mr. Halderman, you just had a sale last night. It's about the end of the heavy season, although that's changed. It used to be that the heavy season was always from about November until March. You do stuff still through the year, but you did have a really active year since the last time we were on together at the end of last year. What's going on with land sales and cash rents after that, but land sales in particular?
So welcome everyone, and glad you're joining us today. When we picked this date, we had really no intent for it to be the day after, quote, Liberation Day. But that's the way it worked out. And we're just really thankful we have Ted on. And again, that was not planned by us. It just worked out. And I look forward to his comments around impact on trade and
Wait,
all of
having
those
Ted on was planned. It's just that we didn't know that Trump was going to do Liberation Day and announce tariffs the day before Ted was on.
Correct. I'm not suggesting President Trump followed our lead, but he could have.
We think that maybe there was something to that. So what happened at last night's sale? And then I think the thing before we hit record and let everybody in was really interesting. You talked about how there's been a little bit of a sea change just in the last 3 or 4 weeks because what do investors not like? Uncertainty. And so I guess talk about last night and then go back, or if you want to start at the beginning from January 1 on, but you got some cool information there.
Yeah, so we finished last year, and I'm going to share my screen for just a second here. Nolan, you got the trend for 24 on your screen?
No,
yes.
Now it is. Okay, so this is last year's WAPI chart. Those of you that are new to this, we basically take our sale prices per acre on cropland sales that are 90% cropland or more. We take out those sales that include buildings and woods and that kind of activity. Really specific to cropland, and we basically take the sale price and we divide it by the weighted average productivity index of the soils on that farm. And every farm in your soil type in Indiana is rated for its ability to produce corn, and that's what we use. And you can see the chart here, and up through November 1st of last year, 2024, it was a downward trend line. And then the election occurs, and you can see the final couple months of the quarter of the year ends up stronger, and the trend line actually ended the year upward. So to a degree, that was a surprise, but certainly a lot of positive feelings about the marketplace as we ended 2024. Here's the longer term 23-24 chart, slight trend upward, trading in the low 80s dollars per bushel of corn productivity index. So here's 2025. And we've done a number of sales through the first now 3+ months of the year. And up until 3 weeks ago, Damian, if you'd closed the year at the end of the first week of March, which, 2 months and 1 week do not make a year, but if you did, our average per dollars per WAPI index point would have been 89, all-time record. The last 3 weeks, that word uncertainty has really factored in, I believe, and our sales results have been weaker, and we've been trading in the below 80 in many cases. And right now, for the year, if you factor in all these 90% cropland sales, we're right around $84.61. So not at the all-time high, below 2022, which 2022's best farm income year ever. It should have been the all-time high. Last night's sale, you referenced that. That ended up, two tracts were at 86 and the other tract was at 82. So right at really close to where the year average is. And so it's been an interesting year so far. But what I've noticed the last 3 weeks is that that word uncertainty is starting to factor into the farmland marketplace. Now, Iowa and Illinois, I just read the results from those surveys that they did back at the end of the year. I think Iowa farmland values were down maybe 6%. Illinois farmland values down 3%. Our data had not shown that. And I think the Eastern Corn Belt has a lot of influences that are not ag related. You've got data centers. You've got the LEAP project down by Indianapolis. You've got the big Intel plant over northeast corner of Columbus, Ohio. There's a lot of other economic generated results that are creating some tax deferred exchanges. And I think that's supportive of land values.
I want to point out something that I remember I always try to think like the listener that's not as knee deep in the kind of stuff that you guys do every day, because obviously you've got a whole cast and crew there at Halderman that's in this. If you didn't attend one of our past webinars, first off, shame on you, you should check them out. But WAPI, the index that Howard is referencing here, he's referenced in several of our webinars, but it's a tremendous baseline because, if you're talking coffee shop, oh, I heard this sold for that. That's all crazy stuff. This is the closest thing to just, I guess, really having a strong reference of what the numbers are. So for someone that wasn't on the last couple, would you be able to kind of just, Howard, reference the WAPI? Because someone might say, well, wait a minute, he said dollars per corn bushel. Heck, my guy made 240 bushel corn. It's not just what they maybe made last year. So could you just give a little bit, because somebody maybe, because it's such a strong index,
Sure.
but for the person that maybe hasn't heard you explain it before.
Yeah. So the United States Department of Agriculture and Purdue University in this case had worked together over multiple iterations, I believe. They have mapped every soil type in the state of Indiana. You can go Ohio, Illinois. The states use different systems for how they rate each soil type for its ability to produce corn in this instance. Iowa, for example, uses the corn suitability rating, and it's a 0 to 100 point scale. Indiana's is kind of below 100 all the way to, I think the highest rated soil in the state of Indiana is 188 bushels of corn per acre. Clearly, that produces way more than that today. But that basically allows us to map a field, look at the soils that exist on that field, average them out, and you end up with an average corn bushels per acre of productivity index. And that might be anywhere 140, 145 is an average farm in Indiana. So if you look at our sale brochure and it says this farm last night, we sold one piece was at 150, one was at 152, and the best piece that brought the most dollars, surprise, surprise, is 165 bushels to the acre. So that's the variability that you see.
And so if a person wonders where that number comes from, you just explained it. It's basically, it's the Purdue set it for the state of Indiana, and then it's a reference method so that you can benchmark your, like I said, it's very strong data versus just anecdotal or coffee shop stuff because it's a real number. Can somebody find that, or is that something specific to you guys?
No. They can easily find that. That's a soil survey that every county did, and they should be able to find that online. We use Surety, a tool called Surety, to map our fields and average the productivity index. I think you can do it on acres.com as well. So there are a variety of tools that you can use.
And a person that's listening to this, I think you said something really strong, because you and I are both Indiana, and Ted are Indiana, and so is Nolan. All of us are Indiana residents or natives. And you said Eastern Corn Belt versus Western Corn Belt. To a person that understands that variability, what you're saying there is, in parts of Iowa, because Iowa's about 60% larger state geographically than Indiana, with less than half the population, its highest and best use is agricultural, whereas in parts of Indiana and Ohio, because of a more dense population, a cornfield has more value than just a cornfield in many places. That was your reference to that.
Exactly. You just have a halo effect from other economies. Indiana's the largest manufacturing state in the country. So those kind of new developments and new things that are happening, they buy bare land for that. I'm not here to argue that whether that's right or wrong. It just happens. They're buying it for housing. They're buying it for manufacturing plants, data centers, and they pay a multiple per acre of cropland value. And then people look to do a 1031, Section 1031 exchange. And that influences the farmland market, because that's dollars that chase farms that are for sale. And when you're in a below average supply market, like we've been in for a number of years, more dollars chasing farms for sale, it creates a higher value.
A couple of thoughts on that. Also, I saw the same thing about University of Illinois said a 6% down. Can you speak to, then, you think Indiana right now, our home state, you think Eastern Corn Belt is at flat, and you think other areas are down, but the trend, if you had to speak to the trend, you would say we're going to see some downward pressure.
Yes, I think the overall trend, and I said this in our seminars all winter, our data was showing that we were at the all-time high. However, I said at the end of the year, I fully expect us to not be anywhere close to the all-time high. I think we'll see some slight decline, assuming the economy in the ag economy remains as it is today, which if you look at corn prices are at or below break even, soybean prices are well below break even today for the 25 crop. And so barring unforeseen government program support program payments that might come in the future, you're looking at probably declining farm incomes on the row crop side, livestock not so much, and that I think is going to be a little bit of a negative driver on downward pressure. This chart here is basically a bar chart that shows the annual WAPI dollars per bushel in a bar chart. The blue, actual real numbers, called nominal. And then if you inflation adjust them, this gives you a little bit of a comparison to show that 24, even though the 25 nominal number is above 24, inflation adjusted, 24 was a little bit better year from a sale price standpoint. So that I think, Damian, kind of captures what we want to talk about on the land value side. On the rental side, across Halderman, and we're managing 600 farms in Ohio, Indiana, Michigan, and Illinois, majority of them, across our portfolio, steady was the word. And I did a lease survey of all of our staff as of March 1st. So I said, for 25 leases, what were your results? And it was 95% of the farms were steady. Maybe a tick down if you had some rents that had been at 400, which would be a super premium rent. Those might have come down some, but steady was the word across our portfolio. Again, I think there are other crop opportunities, specialty crop opportunities that some of our producers can tie into. The point I made all winter was that you would expect in a declining farm income market, well, gosh, they ought to pay less rent, right? Farm rents tend to be real sticky. And so what you find are farmers will pay steady rates for the next year because they don't want to lose that opportunity to farm the farm. And we did have an instance or two this winter where we had some leases that changed because the tenancy changed. And we were surprised in one instance, actually, we ended up being $5 more than what we had last year. So there was strength in the marketplace there that has kept those rates steady. So that's what we saw for rents for 2025. I think, again, as I said earlier, if you see that negativity around the farmland income standpoint going into fall, probably a little downward pressure on rents for 26 could be expected.
Yeah, so I was going to ask you when you said sticky, because it tends to be, even if land prices go down, rents stay there because farmers don't want to lose it or because it takes a little lag. Is it 1 year? In other words, that's what I was going to ask. So you think if we stay in this sort of lull to downward, the rents will adjust for 26? And like, in other words, if you will even be doing that with your own arrangements, you'll say, yeah, we're probably going to take a, what are we talking, 5 to 10%, you think?
Oh, yeah, at the most. The other thing that will factor into it is pressure from ag lenders. And so all winter, your various seminars that we did, we partner with various ag lenders. And I would ask them, well, what are you experiencing in your renewal season? And the comment almost across the board was, yep, we're getting them all done. It just takes longer this year. Working capital is eroding. And so I think those challenges, again, if we look at a negative income year this year, that will be the big key is what has happened to working capital, and then what does that allow folks to do, whether it be buying land or renting land for 2026.
Yeah, and so your point was you think even if we make an adjustment in 2026, there will be a little bit of there will be a little bit of damage, meaning there are some of those that are just were teetering last year. After a year or two of teetering, there might be some problems, but then that just is a tenant change. It's not devastation. It's just tenant changes, right?
Correct. Yeah, we've had a couple of tenants this year that were not able to get financing for 2025, and so they give up a farm, and we've made changes, and there are plenty of options to replace at this point in time in the marketplace.
All right. Remember, if you have any questions, put them in the chat feature. We do this every webinar. We lead off with a marketplace update, and things could be it could be very different come June if we do the next webinar and sometime this summer. But now we're moving on to the main event. That was the undercard right there, Ted. Now it's the main event. You're the main event. Let's get ready to rumble. We're talking about agriculture in Washington, what's happening now. Ted's the National Association of State Departments of Agriculture CEO. He was the Undersecretary of Trade and Agriculture
Foreign affairs.
previously. He's from a Clinton County farm background, and he's joining us. Okay, Ted, I'm just gonna. You're the kind of guy that can just throw a softball too, and you're gonna just start hitting it out of the park. There's your softball. There's your softball. Uh, I can go on. New trade regime. U.S. aims to topple the age of globalization. Trump slaps broad tariffs on imports. Obviously, this is this morning's Wall Street Journal. I can go on about other countries. We've been hearing it. There's your softball. Run with it.
Well, hey, Damien, thanks. And Howard, good to see you again. We get to see each other a couple times a year at Farm Foundation, and I'm always grateful for that. And let me just do a shout out. I was glad to have the list of attendees or potential attendees. So if they're the same ones I think they are, names like Vaughter and Stafford, Townsend, Fisher, Whittington, Bulgy are in there. And goodness me, some of those people perhaps ought to be speaking and not me, but we'll do our best. Well, I'm glad you mentioned and held up the Wall Street Journal because for those, I hope everybody reads the articles today, and in particular reads the top editorial. I clearly they come at a very, very business focused angle, as they should. That's what the Wall Street is all about. What's the Wall Street Journal is about. But for those that have the Wall Street Journal or can get it, you need to read that editorial because I think it's very insightful. And I'm going to reference some things about that. And in full disclosure, I've been referencing these kinds of things before they put it in the editorial. I would never declare myself any better than the editorial board of the Wall Street Journal, but I have been talking about these things. And I'm going to try very hard. And Howard, bring me back. Damien, Howard, bring me back on what some of these things might mean to your clients, people who are land holders that are turning their real estate over to you and somebody to help manage that. I'll try to do that. First, to try to explain, first of all, the disclaimer is who the hell knows what's really going on. I've just got to say that. The pace at which the president has been going is, I think, fully intentional. I don't like to use the word blitzkrieg, but it makes there's an equivalence here in just a fast moving, fast paced, massive effort that can overwhelm opposition forces, whoever those might be. And I think that's why we're seeing lots of change even before, in the case of USDA, Secretary Rollins was there. And certainly countless changes are going on before even the deputy secretary or the undersecretaries are there. And I think he's done his calculus right. If he's going to make changes, I'm speaking to the president now, if he's going to make changes, you have to be ever so lightning fast. Otherwise, the natural forces of government and the judicial branch and all that will pull you back. So for better or worse, and I think it's probably a mix of both, we're seeing an incredibly, incredibly broad and an incredibly fast pace. The tariffs should not be new to any of us, period. These were pronounced through many, many, many events. I'm guessing that many of us didn't anticipate quite the magnitude in terms of breadth and in some cases depth. Probably shouldn't be any surprise about the magnitude of the tariffs on China. Same with Europe. Some of the other countries might be a bit of a surprise. So that should not be, but it is. And now we're just going to have to wait and see. And let me try to give the ledger sheet as I see it. If you're wondering whether trade is fair around the world, the answer it is unequivocally not fair, and particularly to the US of A. It is not fair. Now, we could argue long and hard whether our size, our wealth, the magnitude, the superpower that we are ought to take and suck up some of that and be willing to take something less than what is maybe fair on a ledger sheet, on a counting sheet. That'll be a debate for the ages. But I'm just telling you, if you were just counting tariff levels, and I think the grid or the table that is being shown and is very handy, by the way, I'll just tell you, I lived it. Trade is not fair. So there's got to be something valuable and good about trying to straighten out some of that. I think there'll be a lot of analysis on the tariff rates that those countries charge us per the president's table, his graph. I bet many of them will come back and say, hold on, not so fast. Your calculations are wrong. Let's just say in the ballpark, they're closer to right than wrong. And at least I've looked over them and I would say, okay, I could probably disagree with some, but in the general and in the relevance, I would say they're more right than wrong. And I'm going to be watching.
And by the way, when you say what you're talking about more right than wrong, you're just saying the rates, because a lot of Americans had no idea, honestly, that, like, for instance, Canada puts a 285% tariff on a dairy product, and that's only the little bit that they allow to come up there because they protect their own dairy. A lot of Americans, even in ag, Ted, didn't know that. So I think what you're just saying there is, to clarify for our listeners and the people that watch the replay, you're saying maybe the numbers aren't exact, but they're pretty darn close on that most Americans didn't know. For instance, a car from the United States gets hit with a 25% tariff to go into Germany or whatever that number should be because they are protecting Audi, Volkswagen, Porsche, BMW, right? That's, you're saying they may not be exact, but across the board, they're pretty damn close.
That's right. And by the way, the chart I'm looking at, I don't know if you can see this, but this is the one that he held up. Let me get it. This is the one that he held up, and this is the one you should look at, and it's the one I'm referencing. So yes, now let me jump to an issue of long ago and help you understand. I still get questions about why the president pulled out of the TPP agreement that on paper looked outstanding, and it was outstanding for ag. This is where all of Asia Pacific and some of Central South Pacific did a deal with the US. And it was multilateral, meaning many, many, many countries. It excluded China. That was one of the primary benefits, as many saw it, was to let some of the more democratic oriented free enterprise countries come together.
Ted, that was, just a reference, that was in Trump term one, January, almost immediately upon inauguration of 2017, yes?
It was put together by his predecessor, and he pulled out of it on day one. And you need to know that for ag, it was pretty doggone good. the issue was there was left open some gaping holes that you could drive about 3 semi trucks through in terms of auto trucks and auto parts. And it's clear to you, or it should be, that autos and the workers of autos and auto parts and trucks and the whole assembly, all that goes, is a very, very important strategic intent here by the president. So looking back at that, you can then fast forward to where we are today. The president is very much a bilateral trade guy. I want to deal with one country at a time, and we'll get there. I hope he follows through on that. And we did do that in Trump 45. Some of us would have taken on more countries, but USTR's staff is limited. And particularly when you're taking on the likes of a redo in Japan or redo in Korea, clearly the China Phase 1 agreement were major. But I think we learned a lot from those. And I think you'll see some remnants of those negotiations come back. So let me start with China. Many people, and I think the news media in particular, less the lay media like the ag trade media, but certainly the lay media would say it didn't work because China didn't buy all that it said it would be buying. And in that sense, it's true. I think the truth is that most of us never believed that they would buy all that they signed on the dotted line for. But what most people do not realize, and the huge victory there, was that we were able to negotiate the opening of more than 3,300 processing plants. I'll speak to plants, and I don't know if these were off the list or on, but I'll cite as an examples for those that know. There's a big Tyson plant in Logansport, Indiana. Indiana Packers would be pork up near Delphi. Take those times 3,300, and they were not letting them export. The way that works is the Food Safety Inspection Service of USDA validates that there is equivalence in food safety and quality inspection. And if FSIS puts a plant, popcorn, oil processing, pork, beef, poultry, dairy, you name it, if FSIS or APHIS puts on their website that those meet the China's standards, then China is to then put it on their website, and that was not happening. So no pet food was moving to China. Beef was barely moving there, and they're now moving in large form now. I think there's a hiccup on beef because they've not been relisting those plants. But the point is, it was a huge victory, and it came because of tariffs and then a doubling of tariffs when Mr. Xi Jinping decided to pull back and thought he was giving away too much. And so we did get to the finish line. So he's a bilateral guy. And I'm looking, this is what I'm looking for. I can't project that it's going to happen, but I'm looking, I'm hoping that countries will say, I don't like these tariffs. I'm going to come back and renegotiate on something that is fair or more fair. Second thing I'm looking for is, will there be a elimination of any tariffs? I mean, a 0 to 0. I'll take the UK. I was at their embassy last night speaking to their people, good people, by the way. I have a sense that that 10% floor is intended to stay. It would not surprise me if it stays. Well, will a country offer a 0 for 0? Would he take it? I hope he would. That's ultimately what I grew up. Mike Bulgy, that's what you taught us in econ. You know, tariffs are a tax. That's disputed by other people. That's what I was taught. And so if we can get 0 to 0, like we have now with Europe on distilled spirits and wines, I don't know if you know that, a few years ago, 1997, 0 to 0. But once again, it got pulled back in and there's tariffs and it'll come back from Europe in that regard. So I'm watching to see, will countries come back and negotiate, or will they double down and counterpunch? For those that counterpunch, I'm guessing at least a 2x re-counterpunch and maybe a 3x counterpunch. A little like what happened in China.
I want to go to China, and I'm sure Howard has maybe a comment on that also. So China, the new number now is up to like 45%. And I think it's everything, but you can look at your chart there. That's the one that everybody in ag has been hearing about. We've been hearing about China for a solid 20 years. Obviously, it was a China miracle that allowed us to uh, ramp up our soybean, corn, and beet and pork production by 50% in the last 25 years. It's not nothing, right? But China obviously has been finagling and almost colonizing South America, in particular Brazil, to get their supply. I guess I would argue, Ted, things were going to change between us and China. They already were, regardless of this. Is this reset? Is it gonna normalize things, or is it gonna just hasten the departure of China? I mean, you've got a handle on this. Your background.
Well,
I say it hastens what was already happening.
Well, yes, there was a lot of that moving forward anyway. Some people would say that the China phase one was a gift to Brazil because they took market share. My guess is that we were going to lose some of that because of the natural tensions, but clearly I think they also got some because of the negotiations. To answer your question on China, and I'm looking at the chart from the White House says the tariffs charged against the USA by China equate to 67%. And in their words, discounted reciprocal tariffs, US placing tariffs on China is now at 34%. I think there's room there for an increase if the counterpunch comes, and they've said that will happen. So you're right on one account, some of that share was going to be lost to Brazil anyway, just because the superpowers are tense and having their battles. But I think some of it was also as a result of just pure price, pure market economics.
The last article I read said that the trade imbalance with China was 295 billion, meaning we buy almost 300 billion dollars more of their stuff than they buy of ours. And I saw that as recently as a week ago, I think it was. And so you can see where a reset is bound to happen. The problem is we work in agriculture. We are an export for the Haldermans to keep selling farm ground and keeping rents up. We need demand, and we, of all things, are an export-driven agricultural economy, particularly where we all are from, the grain, the Midwest.
And that brings me to my next point. Clearly, a lot of this strategy is to bring back to the US the manufacturing, distribution, packaging, dissemination of what I call widgets. And widgets is a broad term. That could be steel and aluminum, it could be chips, it could be anything that's manufactured.
Hey, wait, Ted, did Bulgy teach you that term also, widgets?
It might have come from Larry Bowl, but I'll give Mr. Bulgy the credit since he's perhaps on the screen here. So, all right. But at any rate, the difference here is that we're so efficient with our manufacturing. A group of 5 employees can manage quite a few thousand acres, perhaps. Sometimes seasonal labor comes into that. And you're not bringing a lot more jobs back here, maybe in processing. So there's a possible plus there. Let Tate and Lyle do more manufacturing here and export it with no tariffs. Those kinds of stories, I think, are a real possibility. But if the story is always about bringing back manufacturing plants for widgets, and then the trade-off could very easily be agriculture. I hope that is not the case. Now, I also believe that the president will protect farmers. I believe there is a program in place or getting in place that will pay the farmers as they did under Trump 45 for losses. And so good. At least there's some love and respect for the farmer. But the catch is at what expense to lost markets? Are we paying the farmer to keep them whole only to see a withering of our markets? And only time will tell that. So to answer your question about what's the crystal ball, well, we should have another one of these sessions in 6 months, and then in 12 months, and then in 18 months, and then I think we'll see the trend line. That's another good econ term that we learned in ag econ. So the answer is we don't know, but I tell you what, if there's a doubling and a tripling down, if countries decide to counterpunch, at some point there's going to be a recognition. Let's just go negotiate. Let's just take the gloves off. Let's go negotiate. And I believe that's where the president is. And so we're going to have to work with him and see how that goes.
Howard, you probably got something.
So Ted, I would agree. I think we have clearly lost a tremendous amount of market share globally, as well as primarily in China, going from 70% of their soybeans down to 20 or less today. So that's a concern, and I think that's going to be sorted out over the next few months as they retaliate. And unfortunately, that's fairly well known. What about a farm bill? You know, I remember in January when we were together, there was some discussion. Well, they really don't need a farm bill. They can continue to extend it, and there might be, in some regard, some appeal to that. So, do you think Congress does what they're supposed to do and get a new farm bill written, or are we just going to see this ride forward on extensions?
We'll see a farm bill. The when is the big question. If they brought up tomorrow, I'd be the biggest cheerleader and help try to push that thing through. I'm not sure now is the best time to do that. Right now, the only theme you hear in this town or anywhere near it is the cuts. And so to throw a farm bill in the middle of all these headwinds of cut, and by the way, make them drastic if you can, probably isn't the best for U.S. farmers and agriculture. But I think that will subside some, and I think later this year is when I'd at latest I'd like to see it. Now that said, I think there's every possibility it'll be next year. Now, brand new as a result of what we just saw in this table I showed that you couldn't see, but that you need to get, is I think I've read that Senator Bozeman and C.G. Thompson, Bozeman is the Senate chair of Senate Ag Committee. G.T. Thompson from Pennsylvania is chair of the House Ag Committee. Both very, very capable, very capable. I think they're going to be looking more closely now at some of the risk management tools of a farm bill going into the reconciliation bill, which is clearly going to happen. It has to happen, otherwise we shut down the government. That's not the way I'd like to see it, because then you start taking pieces and parts of what is a nice, compact, well understood farm bill and throwing it into reconciliation. But I'd support it because I think the farmers need those flexible tools. Some of that might be insurance, which is very important. There might be some adjustments to price supports. But remember, throw that into reconciliation and you are facing some conservatives that are willing in some cases to hold up even a reconciliation to get the cuts that they have been insisting and insisting and insisting on. You saw that, you've seen that, and you've read that. So that's what we're up against, Howard. That's what we're up against. But I do hope we can get it sooner than later. Period.
You think your prediction is 2026 farm bill?
No, I did not say that. I'd love to see it. It wouldn't be surprising if it goes 2026.
Yeah, I think I would agree. I think this, now in this environment in Washington, that's not a priority. And you don't want to bring something up and try to force it that is going to end up being butchered to the negative outcome to the farmer in that process.
That's right.
And I love crop insurance. It's a great tool. That subsidy at 50% is what most farmers want to keep, and having more flexible tools there, they kind of prefer it because they get to choose how they do it, and less so than the government saying, here's a handout. And I really think farmers prefer that mechanism. So good. You know,
let me add one more point on that, Howard.
Sure.
Just one more quick point. You cannot know how valuable that piece of the farm bill has been when I was out negotiating and resolving problems around the world. Most other countries, it's just X amount of support, never mind a farmer paying in. It was very valuable for me to say, whoa, hold on, this is not apples to apples. Remember, our farmers help pay and can pay mightily to have that insurance. So don't just discount that and pretend it doesn't exist, because that's something that your farmers are not paying in most cases, and U.S. farmers are. So I want to just make sure people knew that, because they may not be aware how others look at that and how they treat that.
Yeah, it's a great point that most of us would have no clue that that's even part of the discussion.
Yeah.
So speaking of foreign affairs, I got questions all winter about, and in fact, I put in slides from American Farm Bureau Federation regarding Chinese ownership of land. in the United States. And so I think there's 22 states that have enacted some sort of foreign ownership restriction. They vary.
Indiana, our home state, being one of them.
Yeah, Indiana's is that if you're from one of 6 countries that are adversarial to the United States, you can't buy farmland in Indiana. Other types of real estate you could, but not farmland. Um, do you think Congress, do you think Washington comes out with some sort of foreign farmland ownership restriction at some point in time in this administration, or do you see any motivation there, Ted?
Well, I hope they don't. I mean, let's talk about the issue. It is real and very real that we need to be sensitive about purchases by countries like China. Um, the hot air balloon that was finally shot down is a great example. Let me tell you what, they've got eyes and ears. They're reading every newspaper of areas where plants exist that from which they're buying. Somebody is reading the Logan Sport paper. Somebody is reading the Indianapolis Star. They read and watch because these are points of leverage. So it is very right to make sure we're not allowing ownership of farmland or any land close to sensitive sites. And you can make up your own determination, but I would say military sites, bases. Some might even say a university, but let's just say military and sensitive DHS kinds of locations. That is right, proper, and just. But I believe, and I talked to several states as they were going through this. I think some of them went too far. For example, I think you can say don't own it, but you can lease it. Some went so far as to say you can't own, lease, and you can't even be in the state. Well, I can think of some fantastic companies that may be owned by China, but are not that. I happen to have high regard for our Syngenta friends, for goodness sake.
Mm-hmm.
And what they're bringing, the defense they have offered on atrazine and the triazines is untold. We do not
And by
want
the
to.
way, to the person listening to this, it says, why is he now talking about Syngenta? Syngenta was a Swiss company purchased by Kim China a
Right.
decade ago. And so
Kim-
obviously still in the ag space, still a global manufacturer, and also some decent technology, as you point out. Are we going to get to where we're messing up our access to good products? I think, Ted, is your point here, just because they have Chinese company ownership
Yes,
of a formerly
that's well
European
said.
company.
And just to be clear, Syngenta is a Swiss-based company. They are listed, they are registered as Swiss. It just happens that Chem China owns most of the stock. So you tell me whether that means they own them or not, probably has some elements. But I think that things like don't own but lease is okay. Smithfield, I mean, goodness me, Smithfield's a similar case. Are we going to disallow Smithfield plants from expanding to add capacity, which, by the way, is taking in American pigs or poultry or whatever the case might be? So I would say let's allow a lease situation. Let the states set up a board of review that they'll meet once a year and say, how are they doing? Any indications? Make sure DHS lists them. Make sure there's the monitoring. Let's don't have any Confucius institutes there, which I think are a front, not an affront, but a front for some nefarious and some positive activities. So I hope that we don't let the federal government in that. I think states can handle that as they wish. That'll be just fine. I know it'll be problematic because they'll all vary, but that's my hope, is that we not have the federal government try to dictate that.
There's actually another thought, and we recorded. Howard lined me up with the state representative in Indiana about this topic, and it sounds neat and it creates a lot of nationalism, if not jingoism. Yeah, keep those foreigners, keep those commies out of Indiana, Ohio, Michigan, name the state. But there's another element of it. If I'm Chinese money, I can set up an LLC in Toronto called We Love America LLC and buy all the farm ground in the Midwest that we want. And it's a Toronto-based company. It just happens to be that it was funded with China. So, I mean, there's plenty of loopholes in this legislation that are pretty easily exploited. I mean, am I thinking clearly here?
No, that's right. Although I think you're going to see more steps to fully validate ownership.
Yeah.
of some of those entities so that that kind of activity is minimized.
And
Right.
But you're right, that's been a possibility.
didn't we get that in the SEC ruling, Ted, where they're requiring ownership of all LLCs to be fully disclosed? And
Yes,
I know
although
it's on again, off again, and I don't know where it stands today, but
it's
there,
off.
it's off. Okay.
I too submitted my driver's license. I think my dad took that to the accountant, but it's off now. I could easily see some element of it coming back to address exactly the issue and the things that Damien had expressed. I do.
Hey, I
Yeah,
want
and
to go
I
to the other. I want to go to the other thing. First off, when you said that there's people in China reading the Indianapolis Star, good for the Indianapolis Star because nobody in Indianapolis is anymore. So that's a good thing. I'm just thinking about the poor Chinese spy that has to, having been an Indianapolis resident, a good 9 articles in every Star every day are devoted to IU basketball, usually historically referencing when they were good 40 years ago. So I just think about how there's somebody in China that's now an expert on Indiana University basketball from 1987, the last time they were good. I just think that's, and by the way, yes, that's 3 Purdue guys bashing on IU. You're welcome. State departments of ag. I want to go back to, since you are the CEO of the National Association of State Departments of Agriculture, trade wars, trade disputes, and it's not like this is the first time we've ever seen this, Ted. Some entities, some sectors, and some states get hurt worse, and some benefit. Sugar, no offense, Howard probably doesn't have a lot of sugar producers in his database. They've always been pretty protected. They love trade disputes because they win on restrictions. Where are the states and the sectors that might benefit? And then where are the states and sectors that get harmed if this trade dispute lingers like maybe it will? Is that a good question, Howard? I think that there's probably some winners and some losers.
It is. It is, and it's going to depend on the commodity item. For example, we just last year got a wonderful win for Texas grapefruit to go to Vietnam. I don't know. I hope not. But will the tariff now against Vietnam cause them to say, thanks very much, I'll go elsewhere? And the same could be said for any commodity. Um, the counterpunches tend to go on a political lineup, though. It is not just by chance that everybody chased bourbon whiskey, knowing that the Senate Majority Leader was from Kentucky prior to Mr. Thune taking that. Louisiana, it just happens to be the home of the Speaker of the House now. Mr. Thune from South Dakota, now the Senate Majority Leader. So there's always some gamesmanship of picking those states where the most harm can be felt, because I think they know that agriculture is pretty vocal and loved and revered and cared for. So there'll be some of that. But at the level and the magnitude of this chart, I think everybody's going to be fair game.
So, example I would give, Ted, is that we have some assets for some of our clients in southeast Georgia. They're blueberries. And blueberry market, that time of year, which is we're entering right now, is their harvest season, late April, May, and June, competes against Mexican berries. So that's an industry. And so I would think vegetables and fruits and those things that are perishable probably get some protection, because the competition for them, and it's honestly because grocery stores want to have year-round supply of these products,
Right.
Come from South America, come from Central America, and then there is a little overlap of seasons from time to time. There might be some benefit to those growers. Your commodities, corn, soybeans, wheat, cotton, probably are the ones that don't get the benefit. Is that a fair way to say that, Ted?
I think you said that well. And the region of the U.S. you picked is particularly sensitive to imports, mostly from Mexico. There is some from Central America, as you suggested. So we'll see if the tariff keeps them out, at least on the shoulders. When we started allowing Mexico to bring those products in, it was a good thing because it was counter-seasonal. That it brought us blueberries and watermelons and other fruits and vegetables at a time when we did not have them in production. But whether it's called cheating whether it was allowed, whatever the case might be, all of a sudden there became head to head on what I call the shoulders of that. So there may be some benefits for watermelon, blueberry, fruits and vegetables of Georgia, Florida, Alabama, maybe South Carolina, some. There might be some. But my hope is that for places where tariffs goes on, I hope it's a negotiating tool that says, let's talk, let's get those down, because I think we want as much fair trade. I've lost the word free trade. There really truly is no such thing as free trade. There's always some protections. I'd be satisfied with fair protection. And I think there is that possibility, but it's going to have to be two to tango, two agreeing, and then they bring them down. I'm watching the
All right.
UK. I hope they're the first.
All right. So that's cool, UK. But that's about 60 million possible consumers. We have 130 million consumers just across our southern border and another 41 million just across our northern border. I think that ag has gotten so conditioned. Every meeting Howard's gone to, every meeting you've gone to, every meeting I've gone to for the last 20 years has been China, China, China. A lot of people in ag don't even realize this. China, as a trading partner for even American ag, has been dropping precipitously the last several years. Meanwhile, Mexico has ascended, as has Canada. What, and you're not in the head of the policymakers, I get this, but of all the wars that I didn't think that we needed to really stir the pot on was the Mexico-Canada one, because we don't have to put stuff on a ship to go to those two countries. We have the rail, we have the trucks, and we have the geographic proximity. Tell me that we actually are going to work something out there, because that makes up for a whole lot of problems with China if we can really cultivate a deeper relationship with those two countries who are already, Mexico is our number one and Canada is our number two. They're basically tied as our ag export markets. Ted, what is your thing? Because that's got, to me, and I'm sure Howard, you think the same way, that's the one that has to get buttoned up first.
I believe we will resolve those. Right now, the latest frustration, the reason these tariffs are continuing is that the president's not satisfied enough with the fentanyl stoppage, slowage. But I think he knows well how important those are. It's kind of interesting. I've been talking the last 3 years to Canada that they need to straighten out dairy. Now, just so you know, I think most of us are okay if they keep their managed dairy system. But you can't then continue to grow the high value yogurts, cheeses, ultra filtered milk like our good friends at Fair Oaks and Fairlife produced, but then continue to dump the low cost, low value butter and dry milk powder out the back. A managed system manages what's coming in and what's going out. And maybe they're having some buyer's remorse from being too cute with that, but we've talked to them. Mexico made a very bad mistake on the corn decree that now is resolved. They will allow, as they always did, yellow corn to move down. It's yet to see if they're going to let white corn be going down for those tortillas. But to your question, I think we will resolve those two. I think there's just a little bit more to be done on fentanyl and some of the frustrations. I think immigration is now getting much better in hand, and I do think we'll get back to a reasonable, what I hope is fair trading with our friends north and south, and they are our friends.
So uncertainty is a word that Damien and I have used in this discussion, and I think that's hindering a lot of markets. You know, the tariffs get enacted and the stocks overnight were down 1,200 points. Soybeans down 20 some cents. It's uncertainty. When do you feel like, or you were there at Trump 1, when does Washington get to a point that some certainty can come back? Okay, now we know what the impact of these various initiatives that have been enacted is, and we can actually make decisions based upon those outcomes. When do we get back to that? I'm not saying they're good or bad. All I'm saying is the market trades better when there's certainty as opposed to uncertainty. And when an unknown exists, we see weaker sales. When that unknown becomes a known, we've seen better sales.
Well, to answer the question, I'll make a short answer, but then I need to explain it. I think we'll start seeing more certainty, maybe as early as 6 months, but certainly more clear in a year or two. And here's why I say that. If the strategy here, and we don't know what the strategy is completely, if it's permanent tariffs all the time, then wow, this is going to be some ride. But if the strategy is countries come and negotiate and will reach fair through a negotiation, well, that's going to be occurring for the next 2 or 3 years. You can't
Yep.
just deal with 100 and some countries. So
Yep.
there's always going to be a country or group of countries out there either negotiating, coming in, but I think we'll find more certainty over time. And in fact, I had written down one thing that I think can be helpful for your landowners. We and the Farm Bureau and the National Farmers Union came together and still are very involved in farmer mental health. Anything that could be done to lobby state legislators to keep mental health hotlines available, they really make a difference. And you know that it's uncertainty that causes those kinds of angst. And my gosh, there's more angst now than there ever has been. Every time you think you can, well, weather has always been there, some market uncertainty has always been there, but you could sort of try to get a good consultant like yourselves and figure that out. We have that has all waned. This is all 52 card pickup now. So I think anything on farmer health, I think anything that can be done to help with inputs. And yes, Howard, that even includes cash rents. I
Sure.
think anything that can be done that. By the way, I'm an equal opportunity complainer. I'm telling Corteva and Bayer they better not raise their prices. Same with some others. But I think that's going to help the farmers a lot. And the one I haven't talked about, but is very important to the president, is regulatory relief. You've all heard for every new regulation that comes in, they have to get rid of 10. That's actually going to be very difficult. It's not the fact that a regulation is there or not, it's how it's been interpreted. Most of the regulations that went in over time have been pretty good for agriculture. It's just they took a very liberal or a very conservative bent. But to the degree we can do that, and I think we're already seeing it. I was on a call today with all the pesticide regulators, and I think this Endangered Species Act and its constraints on insecticides, rodenticides, fungicides, and herbicides is going to be much, much better than what it might have been or the trajectory is on. So that will be some certainty that's
Mhm.
brought in. Now, that's more a farmer benefit, a tenant benefit than landowner. But still, if it helps the farmer, it's going to help the landowner. And then I would also say for those who do their own work with the likes of the Farm Service Agency or the Natural Resources Conservation Service or others like that, whether it's the farm manager that does that, or whether it's the farm owner that does that, or whether it's you that do that, Howard, man, I'd get in line early because we're losing a lot of people. I don't think we've lost FSA people yet. We have lost some NRCS people, and I think more could be coming. So those would be some little tidbits, but it all gets to helping that farmer, that tenant out in adding a bit more certainty and a little less angst.
One last idea or thought topic, the tax cuts. The tax cuts that were put in place back in 20, I don't know, 17, um, they expire at the end of the year as of today, April 3rd. Those are some big impacts on farmers, landowners,
Yes, yes,
and farm businesses. So what's the thought around that? Is in the continuing resolution, or were you looking for those to be
yes.
extended? Okay.
That'll be in the resolution. And everything I read, with one data point being the House was able to pass language, and they've got quite a spread there. They were able to get it done. This will be something the president is going to be riding herd on big time. I foresee it passing in some form. There may be some adjustments on the fringes, but I think that relief will pass. It was one of his great prides and joys from first term. I think it will continue in some form in the second term. It's very, very important. And that too, if farmers, tenants, landowners look at it, is simply huge.
Yeah, I just
Have you not paid attention though, Ted? From the Chuck Schumers on down, it means that they're going to try and kill grandma and take basically the same thing we've heard for 40 years coming from the opposition party to the current. Um, it's they're lining up against this like pretty hard. Does the president have the backing and enough votes?
I think he's going to find it one way or the other. And they
which
now
one?
have two additional members of the House. The two replacements in Florida were elected.
Okay.
You know, the media is going to talk about it should have been a bigger spread, but that's giving a little more cushion. I think it's going to pass in some form.
On the tax front, Howard, since you're all about being obviously consultative services to your clients, what thing matters most in the tax arena? What matters most? Estate, capital gains?
Both, those two. So if I'm a farmer, and Ted, you live this. I mean, Tom and your dad, if you own 1,000 acres and it's all in your dad's name today, I'm just throwing out a hypothetical. 1,000 acres in your dad's name in Clinton County, 15,000 an acre plus or minus.
15
That's
million
a $15 million estate. That's not including anything else. That's just the land. So today, if it's all in his name and he hasn't done any estate planning and he passes, all good. He's got an estate tax exemption of 14,700,000 and some thousand, right? So if the tax cuts don't change or don't get reapproved, and it goes back to 7 million, all of a sudden that's a big check that the next generation has to write to cover that tax burden. So estate tax is one. Capital gains tax is the other, because you've got a ton of farmland that has been bought or inherited out here.
Yeah.
From $500 an acre, $1,000 an acre, that's worth 15 today.
Mm-hmm.
And if all of a sudden you take out the step up in basis,
Mm-hmm.
so maybe Ted, this is where you were going with, maybe there's some tweaks around the edges. Step up in basis, we would prefer to have maintained, because most farms are going to generationally transfer. And when they do, that step up in basis and getting that is huge. But the second thing is just the capital gains then tax on that big amount. Does that go from 20%? Does it go back to 28 where it used to be when I started my career? Is it something different? That percentage, I think, bears watching. So those are probably the two biggest. Obviously, income tax and changing the various levels and all that is impactful. Depreciation can be big in a farm operation. It was great when we could accelerate depreciation, but that's manageable. Really, the estate tax and the capital gains tax and basis in that are two huge things. And the worst case scenario would be, oh, by the way, you got to pay your capital gains tax today. Even though you didn't sell the farm, you got to pay it today. That was one proposal that was out there. And
the one proposal about a year ago, Howard, was that it's almost like a tax on your net worth, and you've got to come up with it essentially right now, which there's generally not enough cash flow to do that. You almost have to borrow money to pay that tax in many cases.
Right. Yeah, and I think that's an extreme example. I don't think there's any chance that happens, but that was talked about. And so that was one of those, if you had a mark to the market tax, and so much of this farmland was acquired by generations previous at a low level, that would be a big problem.
Well, you've nailed the right 2 or 3 elements, and I would include depreciation in that. I mean, let's go for broke. Let's try to get them all.
Right.
And those could very well be candidates for discussion. Let me just say that we beat that back last time, and ag was a big piece of that. Our entity, we helped, NASDA helped, as did most of the commodity groups. Back to your membership that are on this call, I'd make sure they are fully aware of that and are writing letters, and maybe even starting now, because we want to ward that off. We want to take that kind of shenanigans off the table, never let it come into possible jump ball. So that if those come back up, it's going to be a letter writing campaign like you've never seen. Maybe even eclipse the Triazine network and their aggressive nature in defending atrazine. And I'm serious. That's where your members, your landowners, and your tenants could be very, very valuable. They're highly regarded. I can't say it any better than you did. Mm-hmm.
Well, and you've got landowners that live all over the country.
That's correct.
So you've got a high percentage, 90-some% of your congressional representatives are not from an ag location.
Right.
And so if you happen to live in, I know one person on this call, one of my clients lives in Delaware. Can you influence those senators and your representative in that state in a positive way over ag land and these tax cuts and what that impact could be? And it's not just farmland, it's small business. I mean,
yes.
you really cut at a very deep level, at a very grassroots level when you look at that, taking away the basis exemption or the estate tax exemption.
Ted's not an accountant, but I just read an article on this in the last week or two. Um, because someone says, well, what difference does it make? If you're on this call and you're saying, hey, I've got this appreciated asset, I've got my farm in Clinton County, Indiana, it's worth $15,000 an acre. I want to get out of it. There's a thing about not just the gain, the 20%, I think is what it is right now. 21% is that what capital gain is right now?
Well, 20, and then you got the Obamacare tax is 23. And then if you have state capital gains, that could factor on top of that.
So it could end up being 25, 26%. But then there's a thing about also recapturing the depreciation against that as well, right? So you're talking about it could end up being a tremendous amount more. So the person that is on this call that says, yeah, I've got $5 million of agricultural real estate that I'm going to sell and live on the rest of my life, count on it could be 65% of that after what you're right. And that's a problem.
Howard, just if I can, I just want to conclude with a few things that might be more uplifting than not. I don't think we should ever forget that I do believe truly that Mr. Trump really loves and respects farmers. I'll cite the fact that Sonny Perdue, I don't think ever got to give the keynote at an American Farm Bureau meeting because his boss always wanted to speak to the farmers. I do think that in the short term, these counterpunch tariffs there'll be some protection. I do believe that USDA is working on that now. And then the wild card is the degree to which the strategy employs a strategic sense of heavy taxes or heavy tariffs, then let's negotiate down, or whether they are there permanently. And then you can predict a little bit more. One's a less rosy pathway, the other one's better. But I do believe he's trying to bring back some sense of fairness for everybody, including farmers. The catch is the attention's going to the widgets and a little less to the farmers, in my view. And that's where I think Brooke Rollins, who is, I think, going to be a very good secretary, she's got the president's ear and he has her ear. And that's something we need very, very strongly, because I don't see a lot of Aggies walking around the White House these days.
Yep.
Okay, so the big takeaway there is you're hoping to quell the uncertainty, and also I guess you've got a lot of experience here. The media works in cycles, and it's a minute to doing it and clicks and all that. This is day one. I mean, if you've been around enough, if you're from my age to Howard's age to your age, my God, we lived in the 80s. This thing could take another couple of weeks, months to play out, and it could be a completely different story come summertime, I think is the answer, right?
Well, low prices cure high prices. Low prices cure low prices. And we have created a lot of demand. What we don't want are tariffs to stand in the way of some of that export demand. The corn price, honestly, had gotten back to a level where you could make money this year. And that's why the projection was 95 million acres of corn going out. Yeah. So it isn't that we were in dire straits. We just don't want the tariffs to break, kind of be the wheat export deal that Mr.
We don't want it to be 1980s wheat embargo all over again.
No, we don't need that again.
No. Mr. McKinney is the CEO of the National Association of the State Departments of Agriculture. He's been around a long, long while. He's in one of my audiences at least a couple of different times over the years. I didn't realize that. Didn't realize he also came back and still got his hands dirty in Clinton County. So good for him. And I also, until today, didn't realize that there was people in China reading the Indianapolis Star. So again, good for them. They can keep up with the box score when the Hoosiers go 8-20 on their basketball campaign next year. But that's a completely different story. Anyway, we do this every quarter here at the Halderman Real Estate and Farm Management Maximize Your Farmland Investment Series. We're very grateful that Ted came on here and gave us it wasn't just a bunch of political talk either. Thank you. It wasn't just, you didn't come in here and act like a congressman or congresswoman and just say, gosh, I'm afraid to say that. I appreciate the fact that you actually gave us some straight scoop. So thank you.
Well, thank you for the opportunity. And again, I'll say I do work hard at keeping my roots in Indiana. I'll happily claim Clinton County. Technically, I grew up in Tipton County, but they're kissing cousins. How's that? So thanks for the opportunity, Damien, and also to you, Howard, and all of those who I know and don't know on the screen. Thank you.
We appreciate Ted's participation today, and I know that you've got a tremendously busy schedule. So really, thank you for making an hour or so for us, and we appreciate what you do. Having your voice in Washington is a big benefit to agriculture. yours and many others. But it's important because our message has to get out.
My pleasure.
Next time. I guess we'll probably be doing this sometime in about June. Does that seem reasonable?
Yes.
Got
So
it.
we're back in June. We're looking at topics that could be a lot around the farm incomes and what are we projecting for 2025, and then how does that going to correlate to what we want to negotiate for 2026 and rents and that angle. And maybe by that time we'll have a little more certainty around some things, maybe tax cuts, maybe how the tariff impact will be. So there'll be a variety of topics to cover.
I think there will be. Till next time, this is the Halderman Real Estate and Farm Management Maximize Your Farmland series of webinar. Thanks again to Ted McKinney and, of course, Howard Halderman. I'm Damian Mason. I'm out of here.
Have a great day, everybody.